Hi fools, welcome to another video from the Motley Fool. I'm Owen Benelek. Now 2014 will be an interesting year for Vodafone shareholders. A lot of these shareholders will have bought this share thinking they can chuck it in the bottom of the drawer, collect the dividend checks and forget about it. That isn't going to work. It has sold its massive stake in Verizon Wireless for 130 billion. Still got to dot the T's, or dot the I's and cross the T's, but that's going to change the company quite a bit, and it's going to mean shareholders, and indeed the company, are going to have to face some big decisions. Of the amount that it's going to get for Verizon Wireless, it's going to return about 112p in cash and shares to shareholders. So the first thing you're going to have to do if you own these shares is decide what you want. Do you want all cash? If you haven't got too many shares, if you're not an oligarch, you can get the company to sell your Verizon shares that you would otherwise get and get it converted into cash, and then you'll just get cash, which is cheaper and a lot easier. But definitely check the tax consequences for yourself on an individual basis. The company itself has big decisions to make. It is getting about £79 billion for Verizon Wireless. It's giving out all but about 27 billion, and it's earmarked about 7 billion for sticking up masts and other things that telecom companies do. That leaves it with about 20 billion to spend. I think it's going to sit on that for a while because it's probably a bit confused about what the future holds itself. It didn't really get a dividend from Verizon Wireless for most of the last 10 years. So I actually think, unlike some people, that its income credentials are still pretty good after the disposal. Analysts are looking for a dividend yield of about 11p next year, which would make a dividend payment of about 11p, which makes a dividend yield of about 5%. It's a bit murkier again because they're going to consolidate the shares in February, so probably a 2-for-1. So if you have 500 shares, you have 250. It'll be twice the level they would have been. You're going to have to keep watching the numbers on this. But in general, I think it will stay as a steady sort of dividend stock. There's also talk that it might be taken over by AT&T or some other rival because it will be a bit more digestible than it was. The bottom line of all this is that this company, as you can tell by all the buts and caveats and ups and downs I'm bringing in, this company, which was the big steady-to-go company, is going to face a kind of choppy first half of 2014, and I think if you're a shareholder, you want to pay attention.